I see it every day. A retail loan officer sees our high comp plan, their eyes light up, they join NEXA. 60 days later, they quit because they realize they actually have to be a business owner. If you're looking for a company to hold your hand and feed you leads, do not join this company. You will fail, and then you'll blame the model. Today, I'm going to tell you about the 5 types of people who should stay exactly where they are. Let's be real, NEXA Mortgage is not for everyone. While the 275 bips and the 100% commission splits may look great on paper, the reality of the broker world is it can be a wake-up call for a lot of loan officers. In this video, I'm going to be brutally honest about the types of people who should not join NEXA. Number one, we're talking about the handholders. Right? If you need a manager to tell you when to clock in or how to structure a basic FHA loan, you're not going to fit in well here. You're just going to get frustrated. That's not to say that we don't have support. Okay, we have more support than most. But do you really want to have to log in constantly to get answers because you just don't know what you're doing? Right? Having to do that may frustrate you. Now, with that said, we do have an academy for new loan officers. You'd be trained from the ground up, and your first few deals would be done with the help of others. I'm hearing really good things about it. Those coming out of the academy, they're closing business. And honestly, I haven't heard anything bad about it yet. So if you're a brand new LO and you want to sort of fast track your mortgage career, skip over the whole working at the bank and skip over the call center and just go straight to the top of the mortgage mountain, this is a great option for you. Number 2, the call center clerks. NEXA Mortgage is not a call center. If you're coming from that environment looking for leads, you're going to be disappointed. We have teams here who supply leads to their team members, and there are vendors you can hire to help you generate leads, like marketing companies, but we do not provide corporate leads. Okay, number 3, the corporate junkie. If you don't have a unique brand identity for yourself and you've been identifying sort of as the name of your company for so long that the idea of leaving them makes you cringe, even if you know it's the right thing to do for your business, then coming to a platform like this may not make you happy. I mean, do you want to come to work, just log into Optimal Blue and see an easy rate stack there? No transparency, nothing creative. You just sort of want to know what your rates are, and you don't have to worry about shopping for your client or worry about your P&L or anything else. Then this isn't going to work for you. Okay, our platform is for the MLO who's looking to take their business to the next level. It's for the entrepreneur and the independent minded. Number 4, the freeloaders. If you expect a zero fee environment to provide you with a personal assistant and a free marketing budget and all you can eat credit reports, you're dreaming. Okay, NEXA loan officers pay for everything. We cover all our expenses. That includes credit reports. Now, thankfully, you can have your client pay for their own credit report, which I do because covering the costs have become outrageous. I'll still cover the cost of like soft pulls, but even those are getting very expensive. But anyways, you run your own P&L here. There are no free lunches in mortgage, ever. And when companies provide you with an office and a printer and a computer and marketing assistants and a processor and maybe even an LOA, that comes at an enormous cost. All of which, of course, are baked into your rates. We're entering a time in mortgage lending when every single client, including your own mother, will shop your rates. You cannot afford to sell high rates. And when you come to a platform like this, it's the total freedom framework, meaning you decide what your costs are going to be, what your overhead is going to be, what your rates are going to be. then if you can't survive or you can't sell those rates, it's nobody's fault but yours. But that's okay because you have the freedom to make adjustments whenever you feel like it because it's your business. I can't stress that enough. If you want to make those kind of changes now, you'd have to quit your company. You'd have to leave and go find another lender that, you fit somewhere. I've just never seen a platform like this that allows you to structure things the way you want. It should be the last move in mortgage you ever have to make. And if you kind of struggle with that, that's one of the things I can help with as your sponsor here, structuring your business in a way that's right for you. But if you don't want control over your own business, then just stay where you are. Number 5, our culture. And this is a big one. If you don't like working from home and connecting with people over Zoom, or you have a problem or a bone to pick with companies who structure themselves as multi-level marketing companies, right, as MLMs, or if you don't like watching blue-collar people winning business and having a good time, then our culture is not right for you. And honestly, if you're just a stuck-up asshole who has to have a fancy office and wears a suit and all this stuff, it's not that you can't be that person here. Like, of course you can. But I just don't think you'll like the people that work here because we're typically not like that. You're going to see normal blue collar people wearing jeans and a t-shirt and winning business. And if you think that might irritate you or you're just a hater, you're not going to fit in. I don't know how else to explain it. I hope that makes sense. And I hope that you would find your home here, right? You're welcome here. I just don't think those kind of persons would like our culture, if that makes sense. All right, that's it for today. If you fall into any one of these categories, stay where you're at. You'll be much happier there.